Hi, and welcome to the MoneyMoves studio, where we aim to educate, inform, and entertain. In today's episode, we don't have a guest that is going to ask a question. I am the one that's asking the question. Recently, something's been happening which affects all of us. And if you haven't heard anything about it, lucky for you, we will cover this. So, Paul, interest rates have gone down. But with that, something else has happened, and that is that the stock market has really flourished and boomed. Please tell me why this is happening.
Hello Ingrid, reporting from the beautiful Cape Town this morning. What are we drinking? We're drinking coffee. No milk, no sugar, black as is, but hopefully the markets are green today. And not hopefully, Ingrid, the markets are running, so I'm wearing green. So let's get into the content. Firstly, before we get into the main question, what is interest rates? So interest rates, as we all know it, and it's a double-sided coin. The one side of the coin is you are the saver. You are putting the money in the bank and you are earning cold hard cash in the form of interest on that savings. The flip side is you are actually borrowing money, in which case you are paying interest. So you're either saving and earning, or you are borrowing and paying.
Now it makes sense that this is something that everyone's been talking about on Twitter and on Facebook and in all the publications that I read online, because you are either a borrower or a lender. All of us in South Africa, we are either or. I know that I fit both these roles that you just explained. Just before we try and assess the correlation between the interest rates going down and the stock market going up, why did we sit with such high interest rates these past few years?
Well, that's a good question, Ingrid. I don't think many people actually know the answers. They know they are paying more on their car loan, but they don't actually know exactly why. So interest rates, it is what it is, but it's also the main tool that we have to our disposal to combat inflation. So inflation has been super high the last couple of years for many reasons, story for another day. But inflation is high. How you combat that is by increasing the interest rates. High inflation equals higher interest rates. And the central banks actually have no choice. They have to do it. So finally, after a long period of sustained high inflation and also in reaction to that sustained high interest rates, inflation is finally starting to cool down, and it has over the last 6 months. We see the result. That means it worked, and now we can also decrease interest rates in response to that.
Okay, so the decreasing of the interest rates would only have happened if inflation also started to, in your words, chill and cool down a bit. So it feels like we're in a positive space here. But now let's come to my initial question. Why did the stock market flourish when this happened?
Right, let's get into the meat and potatoes of the episode. So interest rates are going down, the stock market is rallying. Why? So firstly, it has to do with loans. Everyone and their mother has or have loans. You have a car loan, I have a home loan. Some people have student loans, credit cards. So we all have debt, right? And we are paying interest on this debt every single month. And when interest rates come down, your monthly payment also comes down. All of a sudden, you have higher monthly disposable income. And what are you going to do with the extra money? You're probably going to spend it, or you're going to invest it. One of the two, which means that's stimulus for the economy and the stock market. That's reason number one. Reason number two, interest rates are lower. Now people are much more willing to borrow money and able to borrow money because the cost of borrowing is much lower. Now I've been eyeing this house in Sea Point, this flat that I wanted to buy a couple of years. Finally, interest rates are coming down, so it's cheaper for me to borrow the money. So I'm going to do that. More borrowing of individuals, also companies borrow more money to expand, to run certain projects. So that means more spending in the economy, which means more stimulus, which means prices are going up. Companies are making more money because people are spending the money. And finally, people have had it way too lekker in this country over the last couple of years with their bank accounts. Some bank accounts have offered 8%, 9%, 10%. I even saw one of Time Bank that offers 11% interest in a bank account, which is crazy. And the only reason they could do this was because interest rates were so high. So the savings rate you get in the bank is linked to the high interest rates. Now interest rates are coming down, which means you're not getting 8% on your savings account anymore. You're getting 7.5%. Oh, interest rates coming down again. Now you're getting 7%, 6.5%, 5.5%. All of a sudden, interest rates, savings accounts went from 0 to 0. It sucks again. So what do? You'd rather have your money somewhere else in the market. You're going to buy stocks. Buy crypto, more economic activity, more buyers, and the prices soar. And that is the three reasons why. Firstly, higher disposable income. Secondly, more loans. And thirdly, savings accounts suck again.
What I take from all of this is the extra disposable income that I will now have. I will have to discern really well whether I'm going to buy myself some new gadgets and clothing and travel, go on an adventure, or whether I should actually just invest and put it in the stock market, or maybe I can do both. So viewers, thank you so much for tuning in. This was our second last episode. Please tune in about 2 weeks when our last episode of season 1 will go live. We will also be having a discourse series at this year's Woordfeest, kicking off on the 2nd of October, the 3rd, and then the 4th. Please reach out, follow us on Instagram to stay updated and in the know. Cheers!